Concerns over the tariffs and the impact on the economy weighed on the first quarter at Norwegian Cruise Lines. But Royal Caribbean beat estimates and raised its profit target for the year, citing strong demand. Let's get more on the outlook for the cruise sector. We're joined by James Hardiman, leisure senior analyst at Citi. Thank you very much indeed for joining us, James. Start off, if you would, with Norwegian Cruise Lines. What did they tell investors?
Yeah, I think they told investors what investors already knew, and that is that the consumer is a little bit spooked in the current environment. And as you're thinking about booking travel for this summer or even next year, there's some hesitation, particularly in that those few weeks immediately following Liberation Day, right? Early April. Now, the good news is they've seen some improvement in the last week and a half. We're always hesitant to extrapolate too much from a very short window like that, but that I thought was encouraging.
What about Royal Caribbean? Was the news brighter? I'm just looking at Norwegian Cruise there. What about Royal Caribbean? They sounded like they were doing better.
They did. Ultimately, they spoke to real no wrinkles in their booking patterns, and ultimately their consumer. I think the biggest difference is a difference of slack, right? Mm-hmm. Royal, given their momentum, and they are far and away best in class, I think, in this industry, I think they just had a whole lot more slack in their guidance. And so their ability to sort of look through what was a few weeks, is substantially greater than what we saw out of Norwegian and what we're likely to see out of Carnival when they report next month. But it's all the same consumer to a large degree. There are some differences in terms of sourcing and destinations, high end, low end. But I think the consumer was or continues to be taking a pause, just given the uncertainty. Norwegian wasn't able to look through that in the context of its full year guidance. Royal was.
I'm just looking at a 5-year chart for Norwegian, and I'm showing it down about 6% over the past half decade. Why has it been out of favor?
Yeah, I mean, a big part of that, if we were going back that far, is the pandemic, right? I mean, this was an industry that was laid up, right? They weren't able to be in business for big chunks of 2020 and into 2021. What that left companies like Norwegian, Carnival, and to a lesser degree Royal with was a lot of debt. And so even though the demand has come back to pre-pandemic levels, and I would argue significantly better, these companies were saddled with a lot of leverage that has propagated those losses into the future, right? It takes that much more above the line earnings power just to get back to the earnings levels of prior to the pandemic. These were companies that were making a lot of progress on all those numbers, and certainly with the stocks in 2024. And then we hit this difficult patch from a macro perspective in 2025, and we've undone a lot of that progress, at least with respect to the stock. I think it's way too early to suggest that we've undone the fundamental progress that's been made here.
And sorry, you may have touched on this, but Norwegian, one of the problems was consumers were shying away from the high-end cruises and the private island getaways. So it was the more expensive trips that we're seeing weakness?
Yeah, no, I think it's quite the contrary. I think those private destinations, the high-end consumer is probably holding in better than the low-end consumer in the traditional, ship-only vacations. I think the cruise industry's pivot towards some of these private destinations is opening up a whole new frontier for the industry. And I've got nothing but positive things to say about that, because I believe that the cruise product is better than it's ever been. And you see it in customer satisfaction numbers across the board for all of these companies. The consumers are voting with their travel budgets. And the cruise has been and continues to be a big winner. It's just that, they're a small and growing portion of a broader travel market, which is seeing, some hesitation right now.
Just looking at a 5-year chart for Royal Caribbean, and I know a percentage change over 5 years can be misleading. It depends where you put the goalposts, but Royal Caribbean has surged over 5 years.
Yeah. I mean, they are best in class, and when I talk about what I see as an improvement in the fundamental product that the cruise industry offers, Royal Caribbean has been at the forefront of all of that, and I think has been at the forefront of expanding that addressable market for cruise customers. At their recent analyst day, they talked about cruise consideration pre-pandemic being about 6 in 10 Americans, and today, post-pandemic, right, with a major concern, in terms of communicable diseases, right, which is something that has historically been, a real sticking point for potential cruise customers. That consideration is now 9 in 10, right? So we're up 50% in terms of cruise consideration pre to post pandemic, and Royal Caribbean has been driving an awful lot of that. Most significantly, when they opened Perfect Day at Coco Cay, which is their private island, they invested a lot in that asset, and it's paid, astronomical returns on that investment.
Perfect Day. Oh, yes, I can just see myself lounging now with a book. Thank you very much, James. Really appreciate it. James Hardiman, Leisure Senior Analyst at Citi.